Sri Adhikari Brothers television network is up 14,000% in the last 1 year. Jai Balaji is up 1,000%. Waaree Renewables 930%. Transformers and Rectifiers India is up by almost 900%. And the list goes on. Wow, mesmerizing returns. But what if they have been manipulated? Hello and welcome to our channel 5 Minute Finance by ET Money, where we talk about the basics of personal finance and investments. We recently did a video on Waaree Renewables, a stock with exorbitant price rise in a short span, where some of our viewers commented that had they known about the stock before taking off, they would have made huge profits out of it. Of course, we all wish to invest in stocks that can make us rich like real quick. But what if that sudden price rise is manipulative? To combat such unfair practices, the market watchdog Securities Exchange Board of India, Sebi, along with stock exchanges, has put several surveillance measures in place. And this video is going to be around one such surveillance measure called Additional Surveillance Measure, ASM. But why should you know it? Well, chances are high that the stocks that have given eye-popping returns in the short-term period have been put under the additional surveillance that is under the ASM list by the exchanges. Now, what does it mean for you as an investor? Should you worry or should you stay away from them? How serious is it when a stock is under the ASM list? Should you still buy them? We are going to answer all these questions real quick in a very easy manner in this crisp video. So let's get started. So, ASM, Additional Surveillance Measure Framework, a regulatory initiative by Sebi and recognized stock exchanges, was introduced in 2018. It was designed to keep a close eye on the highly volatile stocks in the Indian stock market. The idea to introduce ASM was to control speculative trading and protect retail investors from adverse trading conditions. The exchanges place such stocks under ASM whose price is not commensurate with their financial health and fundamentals of the company, like earnings, book value, fixed assets, net worth, PE multiple, market capitalization, etc. Let's understand with example what it means. But before we proceed to look at the examples, you must understand that the ASM framework is intended for market surveillance purposes and is not a punishment for those companies. Let's begin with one of the most popular penny stocks turned multi-bagger, Waaree Renewables. It grew by a whopping 930% in the last 1 year, from rupees 205 to over 2000 rupees. The stock is experiencing unusual price fluctuations. Those who would have noticed, these days at the beginning of the trading session, the stock usually hits either the upper or the lower circuits, making it difficult for investors to buy or sell the stock. Now, based on the extreme price variations in the stock, it was placed under the ASM stock list by the Bombay Stock Exchange. Next, let's talk about Jai Balaji Industries. Its share price has grown by over 1000%, which is also under the ASM list. Here, the company has low client concentration, meaning only a handful of individual investors own large chunks of the company shares, and periodically the stock showcases higher price and volume variations. Hope by now you would have understood what it means for a stock to be under ASM. Now let's move to understand how it matters. So, stocks under the ASM list face stricter regulations. The current list of stocks under ASM by NSE are on your screen. We'll also share the link to this document in the description. So if you want to refer to it, you may do that. Now, stocks under the ASM list have to face certain restrictions which are implemented to control the unusual activity on the exchanges. The measures are implemented based on the type and stage of ASM. For instance, a stock that is in the long term and higher stage of ASM will have to face stricter restrictions as compared to the one that is under the initial levels of ASM. But generally, when a stock is tagged under ASM, the investor must provide a 100% margin on the stock, or in other words, you cannot buy it with borrowed money from your broker. Another restriction is on the stock price. The stock price won't swing wildly, as they are capped to a 5% movement in either direction until the stock is removed from the ASM list. For stocks that have moved to the higher stages of ASM, intraday trades in those stocks are restricted, and only delivery-based trades are allowed, meaning you'll have to keep the stock for at least 1 day. You cannot buy and sell that stock within the same day. Now, if you want to understand in detail the stages and restrictions for stocks under different stages of ASM, we have shared the link of a document in description. You may check that. Coming to the big question, should you invest in stocks under the ASM list? First and foremost, just because a stock is included in the ASM framework does not imply that its fundamentals or financial performance have deteriorated. Remember, in the beginning of this video, I had mentioned that a stock going under ASM list is not a punishment for that company. If Sebi and exchanges see unusual trading activity in any stock, including good stocks, including large cap stocks, they can put them under the ASM framework too. For instance, you can find established companies such as Kalyan Jewellers, BSE Limited, Dhanlakshmi Bank, DB Corp under the ASM framework. ASM is to curb extreme volatile price swings and excessive speculation. So if you hold a stock that has come under the ASM framework, nothing changes for you except for that the securities shall be placed in the price band of 5% and the margins shall be levied at the rate of 100%. Also, a stock does not stay under ASM forever. After a minimum of 5 or 15 days, depending on the stage, the stock can be reviewed for exit from the list. And if the stock no longer meets the criteria to stay in the ASM list, it is eligible to exit it. So listen to this carefully. In isolation, a stock under the ASM list is not a major red flag, but the ASM framework should be used in conjunction with other prevailing surveillance measures. This exercise is purely to keep a check on the stock price manipulation and doesn't question the fundamental aspect of the company. The whole idea of ASM is to alert and advise investors to be extra cautious and to carry out necessary due diligence while dealing in stocks of these companies. And it's a wrap. Hope you found this information useful. Please share it with your friends and colleagues as well.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.